am joined by Ralph Watungwa, who is the CEO at Chartered Bank Zimbabwe. Sitting next to him is Bronwyn Williams, who is a trend translator and future finance specialist for Flux Trends. And also engaging us in this conversation is Chibi, the CEO of Cassava Fintech Zimbabwe. Lady and gentlemen, thank you so much for your time as we, delve into what is a very, very important conversation. Ralph, I'd like to begin with you, and I'd like to draw from your experience in banking, your vast experience in banking, your vast experience of working on the continent specifically. What is your assessment of how African governments are preparing for the fourth industrial revolution, and specifically how they are coming up to global standards? And perhaps you'll speak to me specifically from a Zimbabwe point of view.
Okay. Thank you very much, Fifi. I think the banking industry has revolutionized because of digital, purely because of the underdevelopment which has forced the market to actually move faster, to embrace as part of the financial inclusion initiative, where through the use of the mobile phone particularly, we have gone into a stage where we are using that platform to provide banking services to the market. The reason why that is important is it attacks a very important area of financial inclusion, which is an agenda, as you know, across Africa. The other point is obviously the high cost of brick and mortar. It is now very expensive to bank the unbanked using the traditional brick and mortar. And the use of the mobile phone, the use of digital technology is quite key to that objective. If you look at the ICT policy for the country,
sure,
it is now beginning to recognize the need for inclusion, the need for growth, and I can see it dovetail with some of the objectives that we have in the sector. So it's actually quite an important development, which I think is moving in the right direction and in line with the global trends that we've seen of late.
I mean, Eddie, let's stay in Zimbabwe. Would you agree with some of the points that Ralph has raised regarding the ICT policy in Zimbabwe aligning itself with what is happening elsewhere? But also, I mean, your company works specifically in the mobile phone space and drawing financial inclusion there.
Sure.
What's your assessment of how Zimbabwe is faring compared to the rest of the world?
Thank you so much, Fifi. When you look at Zimbabwe and possibly Africa right across, one of the things which we've managed to do is to leverage on the penetration of mobile network operators. What it has done is to give accessibility to that base which has got a mobile device in their hands. When you've got a mobile device in your hands, you can leverage on the mobile technology to include financial inclusion in the agenda. Because the mobile phone technology comes with USSD as well as the connectivity if someone is to use an app. And working with regulators, particularly the central banks, they've enabled KYC light processes.
For some of us who are not in your space, can you debunk the jargon for us?
Okay.
USSC, KYC light?
Okay, I'll possibly say, in terms of someone to onboard for financial services in a big brick and mortar, the conventional banking, they would require to bring a lot of documentation of their identification.
Sure.
But with onboarding for mobile financial services, like EcoCash and any other M-Pesa, MTN, whatever, what they do is they simply need an ID, and that is sufficient for them to actually be on the platform. So you would find Africa has managed to leverage on that, and the continued integration with banks also has kind of bridged the unbanked with the banked and deepened financial inclusion.
I mean, Bronwyn, in your line of work of looking at what is happening everywhere in the financial services space, what is your assessment of what the continent is doing to align itself with the now international standard that some is saying is we as a continent are quite behind?
Well, I wouldn't necessarily say that. I think that Africa has made some great strides in mobile banking. And in fact, in a lot of cases, we're seeing international startups or people that are interested in the fintech space looking to Africa, not only for ideas because of projects such as M-Pesa, which we all know has been a large global success, but also because where they are the biggest problems, they're also the biggest opportunities to take advantage of those markets. So we see a lot of international money and a lot of international eyes on the African situation. We're seeing that Africa's unbanked population as the big opportunity. People are starting to understand that that's where the growth is, that's where the money is. We know Africa's population is a lot younger compared to the other continents, and it's growing. So there's massive, massive opportunities here. And we're seeing pockets of excellence in innovation. We're seeing the sort of Silicon Savannah popping up in Kenya, where we're starting to see quite a big incubator culture growing from there. And also Cape Town, the Silicon Cape as it's been dubbed. There are a lot of very interesting startups coming through there, both homegrown and international transplants, if you want to put it that way.
Sure. But Standard Chartered, I mean, Zimbabwe, and you're talking about a brick and mortar establishment, that's yourselves. Yeah. But I'm interested in how you guys are adapting to this new digital era.
I think one of the things that has literally exponentially grown the digital side is the fact that, as you know, Zimbabwe does not have cash. We actually have a cash shortage. So without an alternative payment or a platform or alternative payment means, it would be virtually impossible for everyone in the market to pay each other. And that has resulted in a significant growth in digital payment platforms. As we speak, I would say in excess of 90% of transactions are actually digital, simply because of the shortage of cash. And one of the arguments we're having is when the economy eventually turns around and cash becomes available, to what extent can we continue to maintain the digitization, platform? Because they are the way to go. That's where everyone is going, and therefore it would be undesirable to retrogress and go back to cash. Within Standard Chartered, and now I'm talking about an initiative that is called the Capturing Digital Initiative, which we launched in Cote d'Ivoire. It so happened that CDI is the name of the product, but also the name of the country where we launched it. We are now leading the Standard Chartered Bank Group in terms of having a platform where you can do virtually everything you can do in a bank, except for the complex product like letters of credit, virtually on your digital platforms, which I think is setting the tone of the direction of movement. What it means for the bank, for example, is that we don't need as much space as we used to have, which means our rental costs, start coming down. For the customer, it means more convenience. If you live in a city, you know the problem of leaving work, driving to a bank, parking, standing in a queue, and going back to work. That all goes away.
Sure.
And we think that the digital agenda is becoming core to all the initiatives that we're doing in the bank, which means that in the banking hall itself, the space that you have is for value-adding conversations, which is about wealth management, about the more sophisticated thing, which is more rewarding for the employees because they're having richer conversations with customers. And I think for the customer, it's efficiency. And for the regulator, it's about the fact that a lot more transactions are becoming more transparent as we digitize.
Yes. For sure. I see you nodding there, Eddie. I just want to know, a little bit about your company and the kind of reach that you've managed to have in that fintech space.
Okay, thank you so much, Fifi. What we have done with EcoCash, which is the product, which is our fintech product, we have managed to build an agent network in excess of 45,000 in a country of about 13 million. We've also managed to build a network of about 60,000 merchants who accept mobile payments. So what is critical for the success of that is to make sure that you build the infrastructure, you build the rails. When you have done that, you have got a starting point in terms of onboarding your customers. Then in addition to that, you have got an intense consumer education program, which actually drives the adoption of those products. And the agent network brings visibility, accessibility, and then you aid that with consumer education. That is actually what has driven the adoption of mobile payments in Zimbabwe.
I mean, you're talking about the infrastructure being
Yes.
a necessity of, ensuring that this digitization strategy that many economies are trying to push further and further into actually is successful. But we do know that infrastructure is one of the major challenges here on the continent. I mean, Bronwyn, to what degree is this infrastructure challenge inhibiting us from perhaps doing more by way of mobile technology and other technologies?
I would agree infrastructure is a challenge. I just want to come back to onboarding and the fact that you can't even talk about financial inclusion before you've talked about giving people identities. Without an identity,
Sure.
How can you be onboarded onto a financial platform? How can you build up a credit score, for example? And particularly with rural communities, how do you then give that identity to people? So we're seeing innovative solutions coming up around the world. I know Estonia has been quite a big leader in that regard of giving all their citizens an e-citizenship identity. India has done something very similar, but that very much is that first step in building the infrastructure required for financial inclusion across the continent.
For sure. Right. We're going to take a bit of a break right now. More a conversation on digitizing Africa's economies, specifically the financial services industry, when we return. You're still watching the CNBC Africa special on digitizing Africa's economies. We'll get straight back into it. We left on the part of financial inclusion and how the emergence of mobile money has promoted financial inclusion on the continent. Of course, I still have my guests with me, Ralph, Eddie and Bronwyn. And let's delve further into this issue of financial inclusion, and great strides have been made, but let's talk about the cost structure now. What are costs looking like of these various products? Would you say they are prohibitive or generally affordable for the masses?
From my point of view, I think they have been very high initially. But as you know, with a lot of the digital platforms or digital equipment and services, the cost continues to come down over time. And one of the things that we've tried to focus on, and I'm sure that's the case with the mobile phone networks, is the customer's ability to do transaction with the cheapest type of phone. That's very, very important, because for those customers that are unable to afford the bigger, more expensive phones, they actually can do everything that a person with an expensive phone can do. So that's very important. And the cost of data, if you look at it, has also been coming down over time. So I would say from a trend point of view, the cost of digital platforms is actually coming down. And my view is that if you then look at it in the context of what it is replacing, the digital P&L, even with the cost that we have today, it certainly is a better business case than the traditional, brick and mortar. And I believe that as costs come down further, it is quite possible for everyone to then be able to access, and in the end, financial inclusion will be achieved.
So costs coming down, but Bronwyn, would you say that they're coming down at a fast enough pace for us to really exploit the opportunities that this technology can bring towards the areas of financial inclusion?
Well, for me, that would be quite a layered question, because as you touched on, there's many different layers of costs in digital banking.
Sure.
There's the device itself, there's the data, there's just the access to the infrastructure. So if you live out in a rural area and there's no fiber or cable laid, you have to involve yourself in very expensive satellite internet, for example, just to have access to that device. So if there's no infrastructure, it doesn't matter how low the costs are, it's still an insurmountable barrier to entry for that particular person. When it comes to data costs, I'm not sure they are reducing fast enough, especially in Africa compared to the rest of the world. We don't have nearly as much free Wi-Fi spots as you would find in some first world countries. And for me, that should be a priority for our leaders to actually look at that, giving people cheaper access to data, because that opens up the whole world to those users, not just in the financial space, but in terms of education and access and connections with potential customers and whole supply chains as well. And then the other cost itself are the costs of the actual platforms that are now offering digital banking services. And from where I sit as an analyst that looks at these things, you've got two very distinct branches of developers or startups, people that are seeing Africa as an easy case to exploit because there are there is so little competition. They can pretty much come into a market and say, here's your solution, but you're really a captive audience that they can then exploit. And then you see other people coming at it more from a socially conscious perspective and offering very, very low cost, even free banking to the consumer, while then pushing those costs over to corporates and to other third-party providers. And that's a much more sustainable model for Africa. When you're starting with a base of people that have never had access to financial services at all, how can you expect them to carry the costs of driving into that market?
For sure, and of course the continent is also known for its huge youth population. And I mean, we look at young people, you're starting a job, I mean, you don't earn that much of money, but you do want to exploit and engage in your mobile phone and the ease of doing everything, shopping, banking and the like. Eddie, what's your view on how this current cost structure is either inhibiting more active participation of our youth, our burgeoning youth, or not?
I'll take it from a different angle and say that when you look at the cost, you need to look at the entire ecosystem.
Okay.
What is involved in the value chain to deliver this kind of service? There's an agent involved who needs to be compensated, and you've got a merchant who also needs to run a business viably. You've got an operator who also needs to be profitable to sustain their business. So eventually, like Ralph says, the costs are actually coming down because that investment is now being done. And now as you scale up, the costs are starting to come down. Admittedly, the Youth for Africa doesn't have as much disposable income, but the beauty of it is that they are now able to cut certain costs where they needed to physically move to a brick and mortar structure, and they're able to transact from wherever they are. That convenience, that 24/7 accessibility, and the cost which they pay, I actually believe that the cost of mobile money and everything else is actually coming down and actually driving adoption.
All right, so costs are looking more positive than negative. Right, so you talked about the agents and all the other service people that are needed to ensure that all of this can happen. Of course, many say that I won't even quote the percentage because it changes depending on which mouth you're hearing from, but the bulk of the jobs of tomorrow have not even been created yet. And we do know that that makes it challenging to now inskill people with jobs that you don't even know what those jobs are going to look like. From Standard Chartered's point of view, how are you addressing or looking at this skills issue? Let's talk about your existing workforce in upskilling them.
I think very interesting, discussion. I had an experience where I wanted something done on my work phone. And obviously my colleagues, working on it, and a day passed and, very little had been done. I was told my phone will be returned tomorrow. I went home and I asked my son, at that time he was 14 years old, and I said, I need to do this. And he looked at me and he says, is that all?
Wow.
And in 2 minutes, he had done it. So I think the challenge is we now need a different kind of employee with new skills, who is able to execute jobs given that pathological understanding of the digital world. As part of my mandate, I also run the Institute of Bankers, which is the education part of banking in Zimbabwe. And what we struggle with is how to migrate the curriculum so that it addresses the challenges of a digital world. So for example, if you do your Institute of Bankers in Africa today, you are still going to be trained on how to use a promissory note or a check, and all those things are now history in most of Zimbabwe. And we're saying, how do we now infuse education that relates to the digital world? For example, law on digital payment systems. That is not there. And even as proudly as we can talk about having moved so far in Africa, you will find that a lot of the environments we live in do not have the regulatory or educational blueprints that can be used, to capture the digital initiative in the way that we should be having. And I think that's a big challenge. And so you're right. Even in the bank, when you digitize, the person that used to do, transactions, to pass entries, what do you do with them? That's all they know. They've done it for 20 years. How do you get to a situation where the same kind of resource is able to migrate and become someone who can talk about digital in a much more informed way. So there's a lot of reskilling that requires to be done in the banking system. And I think that skill is far lagging the development of the digital world.
I mean, Ralph, you're giving us a perspective from the historic banking system, or the historic company that is even Standard Chartered.
Yeah.
And I'm interested in the fintech space that you play in, relatively new. Do you have the same challenges when it comes to the workforce that are coming through? Or do you have the same challenges when it comes to skills?
Well, to some extent, but what we have done is to make ourselves a learning organization. We always say to ourselves, we need to be future ready. And for you to be future ready is to actually start the digital transformation at cultural level, at organizational cultural level. And what you do in that is to make sure that you retool and reskill everyone to remain relevant and adaptive to what is happening. So it's not an end game. It's almost looking at the innovation cycles and say, how do we capture this and how do we relearn and unlearn what we need to forego and move forward. Yeah.
Bronwyn, in your line of work, having covered and even worked for various financial services companies, I mean, the issue of education and skills, how do we compare with what is going on elsewhere? And I don't know, are other countries on the board of re-engaging or re-engineering their education system to ensure that the young people that are coming up now are, you know, not learning how to write a check or
well, from where I sit, the whole education and skills gap challenge is not an African issue only.
All right.
It's a global issue. If you look at the sort of research that's been done, there's actually more white-collar jobs that are at risk of automation than blue-collar jobs, because a lot of white-collar jobs are very process-driven. Any sort of process-driven process can be automated, whereas a blue-collar worker that's maybe an artisan, it's a lot harder to create a machine that does that physical task. That's the first thing people need to be aware of. The next thing is that the half-life of skills is shortening. What we mean by this is no matter what you've studied, whether it's to become a lawyer or a banker or a chartered accountant, whatever skills you invested in are not going to last as long as they did in the past. Everyone across the world has to get used to the idea of continual learning and relearning. So the most important skill we should be training people inside our organizations and our children coming up through the school system is that ability and that willingness to keep on learning. Anyone who loses that ability to learn is going to really, really, really be left behind. So that's what I really want to encourage everyone listening today is look at yourself and say, how can I continue upskilling? As a second sort of sub-trend to that, what we're really seeing is the emergence of hybrid skills as being the most in-demand employees. You mentioned that previously, things like there's a lack of understanding of law in the fintech space, for example. So while a lot of the functions of what lawyers and advocates are doing right now can in theory, really be automated away very easily. A lawyer that has expertise in blockchain regulation, for example, is a lot more valuable person. Likewise, a chartered accountant that's also an expert in big data ethics will be a much more valuable person. So it really comes back to continual learning and upskilling, but not just upskilling yourself in a single vertical, also looking cross silos to see how you can become a hybrid employee, a unique person with a unique background, a unique skill set, and hopefully a relevant skill set too. Just a word of warning in terms of skilling people in the tech space. Skilling people in tech is not a once-off done band-aid solution, because in the tech environment, it's very much a tail-eating snake. Tech skills are the fastest skills to become redundant because technology moves so fast. Skills like negotiation and sales, ability and empathy and training are a lot more valuable and have a lot more long-term longevity in them. So that's just something to be aware of. And also when it comes to the African situation in particular, where we do have a massive skills gap in the IT space, what we're starting to see emerging in the trend space is companies passing the costs of training those employees over to the beneficiary of the skilled person, in other words, to the company itself.
All right. I mean, you say that the skills issue or the lack of is not unique to the continent, but what is unique to the continent is the high unemployment rate that many other more developed countries don't have. So now, Ralph, I just want to understand your thinking of this as we move forward in banking to improving the customer experience through these new innovative technologies. I mean, the real risk of us contributing even further to this unemployment challenge that we currently have on the continent. What's your thinking on it, and as an organization, and even as chair of the Banking Institute there, how are you guys preparing for it?
I think it's for us, like Eddie said, it's about how do you create a learning organization, an organization that is about continuous learning, about knowing things that are key in the sector. For example, today, financial crime control is a big area where people can migrate to. So an interest in developing that skill would become absolutely important. And also, as digitization is going up, the whole idea of cyber security risk is another area that is opening up that requires managing. So there must be a continuous way of ensuring that people are employable. But the other problem that we have in Africa is potentially that we are not creating enough jobs outside the industry. So we are dealing with a situation that is potentially national as opposed to company specific. Because I always say to myself, do I blame the person that invented the bread slicer? Because I would like to see more people, physically cutting the bread.
For sure.
You can't kill the innovation on that basis. You have to ensure that there is an opportunity for those people to create themselves in other areas that the economy can. And I think the challenge with digitization is how do we all collectively create opportunities that our staff can grow into, whilst also capturing the capabilities that are coming in from the young ones. And one of the initiatives that is taking place in Zimbabwe is an emphasis on tech subjects.
Sure.
So a real concerted effort to fund those subjects, kids that are good in that, to be able to give them the potential to really do what they can do, which supports in all that we're talking about from a digital point of view.
For sure. Okay, I'd like to pick up on this issue of collaboration and also the potential issue or problem of the skills flight from many African countries, including Zimbabwe, that we have been seeing. Let's take a short break and we will continue the conversation in just a moment. Welcome back to our panel discussion on digitizing Africa's economies. Now, before the break, we heard about the importance of collaboration as we move forward to exploit the opportunities that technology can bring. And we also discussed the issue of skills. And it's on that note that we will pick up that conversation. And Eddie, regarding skills, I understand that in Zimbabwe's case specifically, that the country is still quite behind in cloud computing, right? But you have a situation whereby there's a real danger of, not even a danger, it's a reality if you look at the amount of Zimbabweans that don't actually live in their own country, very skilled Zimbabweans, but there's a real danger of this continued flight of skills. What are you seeing in your institution there?
Okay, thank you so much. Possibly our institution is possibly providing an alternative. Admittedly, skills flight will always be there. Not because there's no opportunities, some of them are actually economic reasons. But what we have done is with the fintech space, we're almost like an innovation hub. We're always looking at new opportunities with what we've done with mobile money, with what we've done with micro insurance, with e-commerce. So we're actually developing a platform where there's a lot of demand for skills, and we're actually attracting skills even globally for people who would want to be part of the innovations which we are having in Zim. And I believe even when you look at across Africa, the opportunities Bronwyn spoke about, there's actually opportunities for skills to come back to Africa. The issue which comes to mind is possibly some of them, the technologies might be a bit behind, but there's actually an opportunity for those skills to be harnessed back home and be used to actually develop new solutions.
And Ralph, are you also not as worried about the flight of skills, specifically from Zimbabwe, and the potential hindrance that this could bring to technological advancements in all industries in the country?
Yeah, I think it's something that we obviously should be worried about. But my view is that, if you look at it from another angle, the more people that we export, the more assets we have to bring into the country. So as we now turn the economy, we are expecting a lot more Zimbabweans to come back and literally leapfrog from where we left off. So there is an opportunity, subject to there being an environment that is conducive for people that have gone away. And remember, there is no place better than home. A lot of the people that have gone out there at some point are thinking of coming back into African countries, to migrate the skills that they would have had on the other side. And I spoke to you about the CDI model,
sure,
which I talked about. This is a digital platform that has been created in Africa by Africans, and within Standard Chartered, that idea is now being copied in Hong Kong, in Singapore, in India. So to some extent, it was a confirmation that not everything that is good, comes from out there.
For sure.
And because it was done by Zimbabweans, Africans, Ghanaians who are based in Africa, who created that reality. So I think we must think about skills, but we must also not ignore the fact that the world is now a village.
For sure.
Someone being across the border really doesn't, it's neither here nor there. To get someone out into Uganda today is like a flight away. So the whole, concept of they have left the country, I think, is also a myth that we may have to look at and say, really, if someone is sitting in New York today, are they really so far away? They cannot influence development within Africa, within Zimbabwe. So I think it's a double-edged sword. I think it's something that we need to look at, but create an environment within the country that makes people want to come back to Africa, to the continent, and really make a difference for their country.
For sure. And who would you say his responsibility is that? I mean, that enabling environment, the hybrid skills that you were talking about of not just being a one-trick pony right now. I mean, for me, it spells out collaboration and the need for greater collaboration from all stakeholders. And Bronwyn, I'm just interested in your assessment, perhaps the South African case, if that collaboration actually exists.
I don't think it exists anywhere near as much as it should. We have a very strange situation in South Africa where we've got companies that can't find skills and graduates that can't find jobs. That's really ridiculous, but that's where we are right now. So we've got a mismatch of skills. But there's a company that we're looking at quite closely because their model is quite innovative. Instead of saying trying to match a graduate to a company, rather what this company they called We Think Code has done is they've set up a training academy where their education is entirely free to the student. The student learns for free. The education is funded by the company that is lacking that particular skill. So every single one of those graduates has a placement. And because that graduate has a placement, they're not having to leave to go overseas or another country to look for jobs. They are instead filling a need that they can fulfill right there at home, and that's a lot more efficient. So we need to start thinking about education as being more holistically entwined with corporates and with where the jobs are. Corporates have an incentive to train staff, and if they do invest in their staff, those staff are more likely to stay. People leave Africa not because they don't like living in Africa, it's because they can't find opportunities. So if we spin that on its head, and instead of saying, oh, let me study whatever I like and then hopefully I can find a job, if instead you're training for a guaranteed position, that becomes a lot more exciting. And that's a very good way, very easy way that we can start solving a whole lot of our education problems.
Yeah, I mean, here we are seeing a bit of government taking some initiative with the private sector by giving companies a bit of a tax benefit by taking on the youth. But talk to me about what's happening in Zimbabwe regarding collaboration between these young people that are in need of jobs and these new industries that are in need of being built and thrive.
Thank you so much. The collaboration is actually, there's no single process of doing it, but you're actually finding the private sector taking their own initiatives. You're actually finding also the academia in terms of the institutes also doing the same. But what you would find in mostly the private sector is where there's a drift towards online reskilling of the existing staff, and even the staff who are coming out of college, going through that to enhance their skills and become job relevant. So there's a lot of approaches to it. There's collaboration, private and government. There's also individual initiatives at private sector level, and there's also the academic side also doing all these collaborations. But obviously there's still a long way to go in making sure that we reach a point where we say we are satisfied.
Because I mean, for many, we look at Zimbabwe, your journey or your new journey has just begun under your new administration. So I'm just interested, Ralph, this collaboration, you have pointed out that it's an absolute necessity. Are you seeing an uptake from the new administration to work closer with the private sector and also create this enabling environment that is a win-win for all stakeholders?
Yeah, I think it's very visible. I mean, I already have met with the minister. Okay. We're talking about how we can all work together. And if you look at the monetary policy statement that was issued 2 days ago, it is clearly talking about the linkages that should take place. But if you look at our on the digital side, there are issues around, obviously, regulation, because the MNOs are regulated by the Post and Telecommunications Authority, and banks are regulated by the central bank. Really getting to merge those two so that the administration and the expectation in terms of pricing are actually in sync. So that's absolutely important. And the other important discussion that we should have is around how we the interoperability of the systems, because the banks have got systems, the vendors have got their systems, the MNOs have got their systems. How do we make sure that we leverage on the investment and recognizing what each is brought to the table, so that there is a win-win situation for the final customer. So the collaboration is important, and I can see within the Zimbabwean market a lot more discussion to solve some of those challenges rather than working in our own silos. And my view is that very soon we'll see the benefit going to the customer in terms of better service, better uptime of systems, and less blame of who is at fault when things do not work.
I mean, we are seeing a bit of that collaboration in some parts. I mean, we've got now, you can WhatsApp, banks introducing WhatsApp, and then afterwards with the shopping and telecoms, and it looks like everybody's holding hands. But you spoke about that regulatory environment in Zimbabwe, with one house regulating the banks, and the other house regulating the MNOs, you said. So the new tax, talk to me about how this will either, impede faster digitization or improve it. And I'm talking about the decision to now tax, is it 2 cents for every dollar transactions in Zimbabwe, as opposed to 5 cents for the general transactions?
Most probably too early to comment on that, something which has been announced 48 hours ago, and to say how it will take root and what impact is going to be, it could be a bit premature. But maybe what I can point out too is that there is a lot of collaboration between the telco operators as well as the banking fraternity, and even the charges itself. There's almost like it cuts across, is irrespective of industry, it's affecting both, but we are yet to see the outcome in terms of what impact it will have on customers.
I mean, Ralph, we were talking yesterday, and you believe this could actually be a net positive for the masses with less money than people with more loaded pockets?
I think what we need to agree is the tax has been thought through by the regulators. It's no secret that the country has got a significant balance of payment situation which need to be resolved, and there is no it's not a secret that that gap has to be funded. And I think the regulators believe that, in my view, when I look at it, it's been there for just 48 hours. I think that it's obviously a way to raise funding to manage some of the balance of payment challenges. However, the lower end of the market, if you're doing very small transactions, some of the population will actually tend to benefit, because where they were being charged 5 cents for every transaction, they're probably going to pay 2 cents. But at the end of the day, there is absolutely no doubt that the market is to pay. But when you look at it from a different point of view, you say this charge is not only applicable to digital platforms only.
Sure.
It's applicable to everything.
Okay.
And therefore, from a first impression point of view, there will be a cost. But for me, is the discussion around, does it change the digitization profitability model? I still contend that it doesn't. And therefore, whether it's there or not, is really not for us to talk about.
But you did say it's only been in place for 48
it's
hours.
Only 48
so
hours.
let's
so
wait
we'll
and
see how it sits, yes.
Right. So as we just wrap up this discussion, I'd just like to get some final thoughts on this subject matter that we have been discussing, digitizing Africa's economy. Some final thoughts from you, Eddie.
I think for me, Africa has got a huge opportunity. I would want to say mobile is everything. Mobile is banking. Mobile is media. I was actually consuming my CNBC on my phone. Mobile is agriculture. Mobile is health. As long as we try to harness the mobile device, which is in everyone's hands, I think Africa can progress and leapfrog some of the stages which everyone has gone through.
Bronwyn?
I would agree. Mobile has definitely opened up financial inclusion across the continent. The Bill and Melinda Gates Foundation says it's increased penetration into financial services by 20% over the last 6 years. So that's huge, just through your mobile phone alone. I think one of the challenges ahead is that of regulation, and the fact that regulators, particularly in Africa, but around the world, tend to be lagging innovation. So we're trying to apply laws to technology as it's developed, whereas if we could take a more proactive approach, like what Hong Kong and London are doing with their regulatory sandbox type scenarios, we could put ourselves in a very good position. Our unbanked population is actually our greatest strength in terms of becoming a world leader in financial inclusion and in mobile payments and mobile banking and branchless banking. So we need to really harness that. But the only way we can do that is if policymakers and governments are working alongside both incumbents and the existing financial market players.
Ralph?
For me, I think it's for all of us to prepare for surprises and relearning discussions around the role of the traditional branch. Where does it sit? When we digitize, how do we retain emotion? How do we retain the human factor? But the truth of the matter is, the market may be telling us already that they are no longer interested in coming into a brick and mortar structure. It's not for us to decide. It's what we see. And we can see it with the reducing traffic, particularly of young people coming into a bank to do transactions. That should tell us that the cheese has moved. We now need to adapt to the market and think client. And so when we make some of the bold decisions we make, particularly where the brick and mortar has been well entrenched, when we start closing branches, when we start giving a setup of a branch network that is different from what we have known traditionally, we must think back and say, what does the customer want? And I believe that 5-10 years from now, what we call banking will be totally different. And I would doubt if it includes a significant amount of brick and mortar.
And includes yourself. Oh, wow. Thank you. Well, we will leave the discussion there regarding digitizing Africa's economies. A strong element that did come out throughout this conversation was the importance of driving inclusion, financial inclusion on the continent. And of course, we do know that some of the fastest growing economies are in Africa, but also quite a large unemployment rate that can actually be solved with the emergence of more entrepreneurs in the digital space, taking advantage of the unbanked population that has a mobile phone. That is where we leave it for this special edition of Power Lunch in the CNBC Africa Special. Many thanks to my panelists who joined me today. That is Bronwyn Williams, a trained translator and future finance specialist for Flux Trends, along with Ralph Watungwa, CEO at Standard Chartered Bank Zimbabwe, and of course Chibi, the CEO of Cassava Fintech Zimbabwe.